Today is Sunday, May 14. Happy Mother's Day. We are going to look at Home Depot HD because they will be reporting earnings on May 16. That's in 2 days. So tomorrow will be the last day to trade earnings because it's being reported before hours on May 16. So we're going to go over in this video the unusual options that we saw on the last trading day on May 12, on this day, Friday, and then also follow up on our video we did on April 3rd on our current Home Depot trade that we are still in. It has been a little bit more than a month. And so let's go over that as well, and then determine where are we going to go from here and what are we going to do with this trade. So without further ado, let's get right to it. So on April 3rd, this was the trade we had. It was a calendar spread. So this was the trade. It was being paid for 190, and it was a calendar at the 270 strike prices. So currently we are at about $58.92 in profit. So that is 58 and 92 divided by the 190 we spent. So that's about 31% profit so far. We are here. That was what we paid, 190. And we are probably going to be taking profits tomorrow only because this is a calendar spread. And we don't necessarily want this type of strategy going right to earnings because it does have a much larger Vega positive. You'll see here that Vega is 18 Vega, and we know that after earnings, Vega will go down, volatility goes down. So this is not good for the trade because a positive that's going against that Vega. So we know Vega will decrease, it'll be minus, so we don't want that type of trade. However, that doesn't mean we are going to be going bullish, because as you'll hear later in this video, these unusual options that we're seeing don't necessarily point to that direction, and we'll go over that. Before we do that, this trade on April 3rd, to kind of understand why we've got onto this trade, you also have to look at this trade. This was the unusual options that we saw on April 3rd. It was these May 19th 285 strike puts. They were being bought for about 585. If you haven't watched that video, highly recommend to watch that April 3rd video. We'll put a link at the top here. If you have info cards turned on, you can click on that, or at the end of this video, because if you watch that video, you'll learn why we did this trade, how we analyze these unusual options to base our trade on it, and that we did not follow those unusual options. Because if you look here, if you followed it, it's actually at a current loss of $102. You see that minus? That's why we don't always follow these unusual options with the same strike and the same expiration. You have to construct and set up a different trade that takes advantage of that. So if you went with that, there was, and the reason why it's losing mostly because of this negative theta, right? That's really hurts the trade, as if it's not really going to move down fast enough. So it hasn't moved down. Home Depot's only at 290. Although it has come down, it hasn't gone down as to that 285. And these 285 that strike prices, if you remember on April 3rd from that video, they were being placed. There was like 3,000 of them here. So it was this strike price. And we were highlighting how the volume on that day, there was close to this. There was a total of 3,000 of these unusual options in total that were placed on that day. The open interest is still above that 3,000, so they could still be in that position, and it's still open, and they're still holding on to this 285 strike puts. And so we'll be monitoring this too to see if that changes tomorrow. And if it does, we'll update everybody. So make sure you hit the bell icon to be notified if we see any of these changes to these unusual options that we're tracking. Okay. And so this is their trade that was lost. So our position, as we explained on April 3rd, was that we sold the 270. That's why our position is still here. And then we bought the June 16, also the 270, to create that calendar spread because we wanted to take advantage of the volatility. It was very low on Home Depot. I believe it was around 5% on the IV percentile. So let's see where it is now. Yeah, so it's like 26%. So it did increase in IV percentile, and that's also why this calendar spread is profitable. It did not have to drop to 270 or any at the strike price because the volatility increased. That's what's good about the calendar spreads. If you put them on when there's low IV percentile, then you can be profitable when it increases. And this one obviously increased since April 3rd. Make sure you watch that video, you'll see that. And so where are we going to go from here? Because now we have this earnings event coming up. Obviously, we knew also that volatility would increase because as you approach earnings, volatility increases as it gets closer. And so, so since then, we're going to now look at this activity on Friday, on May 12. So you'll see here, let's take a look at these 500 contracts here. These are the largest ones for May 12. So the first two, you'll see they were both done together at 10:32 at the 25-second mark. So these are same orders, June 16's, 285 strike puts and 250 strike puts. And so when we look at this trade, on the June 16, it's actually the same expiration as our long put. So it was the 280s and the 250s. So we look at this here, we have volume here, 550. It is less than the open interest. Same with the 250 strikes here. So this is also less than, so these could be closing orders. So that's just a word of caution. If it's a closing order, then it's the opposite direction of an opening order. So the 280, currently, if they were opening orders, we believe they had bought this 280 here, and then they sold the 250, which is a vertical bear put spread. And if you look at that, let's turn these others off. This is a short position where this becomes profitable if it drops in price here on the x-axis, because the profit line is here. It is going to be above it. Here, the zero line, anything above is profit, anything below is a loss. So this curve on the purple line goes up above it as the price goes down on the x-axis. It'll be a loss if it increases on this direction. So assuming these were opening orders, this would be a bearish trade. Okay, and now when we look at this other one, this one's only done at, this was just a single 275 strike put for 500 of them at 12 noon. And this one is obviously bearish because it's just a put at the 275s. You'll see here, the 275, this one is definitely an open order. You'll see here, those 500 contracts that are within this volume is definitely greater than the 76. So 500 is greater than 76 because there were only 76 that were open prior to Friday on May 12th. So this is an opening order where they bought the 275 strike puts. So this one is, as you can see, is bearish as well. So in summary, these seem more bearish on Home Depot, but things can change on that last day. So anything can happen on this last day tomorrow, for right before earnings. So you want to make sure you have notifications turned on. If you're subscribed, if you're not subscribed, and hit the bell icon, you'll be notified if we see any unusual options right before earnings to change our position, our trade. We will probably stay bearish. We're not sure yet. We're going to make that decision tomorrow. We are definitely going to take some profits off of our calendar spread and reset up our trade for Home Depot. So make sure to subscribe and hit the bell icon to be notified. Make sure to watch that April 3rd video. Very important to understand the video today, on this day when we made that video, to learn how we put on this trade initially, and now where do we go from here? Do we go up from here, or is Home Depot going to go down after earnings? And so we'll see if we see anything unusual tomorrow. Comment below on what you think Home Depot is going to go. Which direction? Is it going to go down or up after earnings on Tuesday morning? Very curious to find out what everybody thinks about Home Depot. Okay, please smash that like button. And as usual, have a wonderful weekend. And again, happy Mother's Day.